Hello everyone, and today we're going to be talking about the MACD indicator, also known as the moving average convergence divergence, and how we could use it to make some money. Alright, let's jump into it. So first thing first, what is the MACD indicator? Well, to put it simply, the MACD indicator is a trend following momentum indicator that shows the relationship between two moving averages of a security's price. And what makes it so good is it shows you when to get in and when to get out of trades. And it's really useful if you're day trading or swing trading. The MACD indicator has four components. First one being the MACD line itself. It's the blue line we have right here. Second one being the MACD signal line. That's the orange line over here. Third one being the zero line. And the fourth is the MACD histogram. So what is the MACD line? Well, the MACD line is the 12-day exponential moving average minus the 26-day exponential moving average. And it gives the short to medium term trend of the price action. And here I have an AMD chart from Friday, July 10th. And this would be the MACD indicator. And you could see the MACD line is going up, same with the signal line, but the MACD line is going up faster. The signal line is the 9-day exponential moving average of the MACD line, and basically it's just a smoothed out, less reactive version of the MACD line. And on the same chart right here we have the signal line in the light orange, dark yellow color, I guess. And you could see that it's going the same direction as the MACD line, but it's a little bit falling behind. The MACD histogram is basically the MACD line minus the signal line. In other words, the histogram shows how far above or below the MACD line is in relationship to the signal line. The histogram can help to assess the velocity of the upward or the downward movement. And on the same chart, here we have the histogram. And as you could see, the histogram has four colors. There's bright red, bright green, and dark green. What bright red means is the MACD line is gaining momentum in the downwards direction, while the dark red is showing that the MACD line is losing that momentum. And the bright green shows that the MACD line is gaining momentum in the upwards direction, while the dark green represents it losing it. And the higher the graphs are, the higher the bars are, that means the more distance there is between the signal line and the MACD line. The main thing to remember about the zero line is that when the MACD line is above the zero line, it signals a bullish momentum. If it's below the zero line, it signals a bearish momentum. And bullish signals are more significant when the crossover takes place below the zero line, because that means there's more room for it to go up. And bearish signals are more significant when the crossover takes place above the zero line. That means there's more room for it to go down. And by crossover, I mean when the MACD crosses the signal line. So how do we use the MACD indicator to make some money? Well, the easiest and safest way to trade using the MACD indicator is by buying when the MACD line crosses above the signal line and selling when the MACD line crosses below the signal line. And this is useful in many time frames. It could be the 1-minute chart, 5 minutes, even 15-minute chart. You could use that to set up a buy price and when to sell. Important, don't forget to look at the position of the crossing relative to the zero line. That's always something you should be on the lookout for. So to demonstrate how to make money by using the MACD line, the safest way it would be to buy right here when the MACD line goes above the signal line, and to sell right here when the MACD line goes below the signal line. Now, if we were to do that, we would have to buy right here at 708, and the middle price at 708 is about 56.50. So we would guess that we bought it right here, and if we were to sell when the MACD line goes below the signal line, we would sell it somewhere right here. That would mean that we would sell for 56.76. In other words, we would make 26 cents per share if we were to buy it when the MACD line goes above the signal line, so like we're supposed to, and sell it when the MACD goes below the signal line right over here. Now, the main reason why I like to use the MACD indicator is because it could show when there is a movement reversal setup. And what that means is that when there's a strong momentum towards a line of support or resistance, followed by a price rejection. And the histogram will show loss of momentum and signs of upcoming reversal. So what you need to do is go in after the big momentum is over and before the price starts reversing. Let me show you what I mean. So we got the same graph over here, and if we buy when it crosses over, we sell when it crosses over on the way down, we will be making 26 cents. Now this is a pretty easy and safe way to do this, but 26 cents per share is not that much profit. Here's what we could do to make this quite a bit more. So as we look at the graph and at the histogram, we notice that we had 4 bright red bars, and then slowly we started losing momentum before we started having bright green bars. So what I like to do is, you gotta compare the colors of the bars on the chart and on the histogram, and notice how we start having dark red ones because we have a green one right here. So usually it's the opposite. If we have a green one right here, that means we're losing momentum. But if we have a red one, we still got a dark red one over here. So what that means is we're losing momentum even when it's still going down. And something else I like to keep track of is I usually go in at the end of the second dark red bar. What I mean by that is, if we look up here, we can see the timer, and we know that at the end of each minute, a new bar comes up. So I like to sit around and wait to make sure that this bar is going to be dark red, and this, the second dark red bar, is where I go in. So I make my purchase here at 706 instead of 708, and we watch as the price goes up slowly. But we also look at this, and like I said, this way is a little bit more risky because we haven't crossed the MACD line, hasn't crossed the signal line yet, but we could see that we've lost basically all the momentum that we had going downwards. So I buy on the second one, the second dark red one, and I put about 25% of what I was going to put. So I put 25% here, and then the rest I put once we finally cross over the signal line in the upwards direction. So I hold, and notice we have a dark green bar when this is red. We have another dark green bar when this is red. We have another dark green bar when this is red. Dark green bar. We have a dark green bar over here when this is red. And here we start having dark green bars even when this is green. So also this is the second dark green bar in a row. So this is where I sell. And if you notice, we went up a little more after this. But once we start having these dark bars in a row, and I notice that even when we have green bars, we're still losing momentum, that is when I sell. And look at this, if we purchased right here, once the second dark red bar was finishing up, we'll buy it for 56.32. And if we sold right here, once the second dark green bar was finishing up, we would sell it for 56.96. So, in other words, we would make 64 cents profit from each share if we bought right here and we sold right here on the second dark green bar. So we bought on the second red bar, dark red bar, we sold on the second dark green bar. And the difference is almost 2.5 times more profit. And the time difference was basically 2 minutes. So that is how I like to do it. And the way I do that is by simply looking at the momentum, watching from the histogram on the MACD indicator. Another example, just to drive home the point, would be the chart I&O on Friday, July 10th. And you can see here that if you were to follow the main rule, I guess, is to buy when the MACD line goes above and sell when it goes below the signal line, you'll see that you end up buying it at about, let's see, 23.18, and if you sell when it goes below, you'll be selling at 23.08. So this is actually one of the few cases where you would lose money by buying a confirmation right here and selling right here when it goes down. But the problem with I&O would be that it goes up and down so fast that the MACD line, it overreacts and the signal line doesn't really move much at all. As you could see here, they're way off. It's almost like they're completely different graphs. But if you follow the rule where you buy the second one when it's going down, you'd be buying it somewhere around here at 23.09, and if you sell at the second dark green one, you'll be selling somewhere right here. So you'll probably make some money, very small amount, and or at least not lose as much if you did this. So the stock you're using this on is also quite important, especially if it's a stock that moves a lot, like I&O. You'll see that the MACD line is simply too fast for the signal line, and the buy and sell signals that you get they're not going to be very accurate. The MACD indicator can also be used to look at the trend of the stock. By looking at the weekly charts, you could see if the trend is in the up direction or down direction. And as the saying goes, the trend is your friend until the very end. So you always want to make sure that you're going with the trend. And if you go on the weekly or maybe even monthly charts, the MACD can show you where you are in that time period, if you're going up or down. Alright, so here we have Facebook, and if you look at the MACD line, it does a pretty accurate job of showing you when it's going up and when it's going down. So judging by the MACD line, you could tell that once it reaches this point, it starts going down, and it goes down for basically the rest of the day. And once it starts going above the signal line over here, it basically goes up for the rest of the day. So you could always look at the bigger picture, see where you are, and if you notice, Facebook has this where it's like it goes up, it goes down, it goes up, it goes down. So you could try and catch these waves if you're more into swing trading instead of day trading. Thank you guys so much for watching. I really appreciate it. Let me know if you have any more questions about the MACD line or maybe some other indicators. I would love to make a video or maybe reply to your comments right there if I have the chance. So just let me know. Subscribe if you can, please. I'd really appreciate it. And have a wonderful day. Take care. Bye-bye.